Hi, welcome to this Grant Thornton Federal Budget Virtual Seminar. The theme this year is Australia Reimagined, as the coalition government tries to reimagine our way out of the COVID recession. My name is Hugh Remington. I'm the National Affairs Editor at Network 10. I'm also one half of the Professor and the Hack Politics podcast with Peter Van Onselen. I can tell you he's the professor, I'm the hack, but we'll hack our way through what's a pretty interesting document that's been handed down last night here out of Canberra. Lots to talk about. This is the budget that's designed to bring us up and out of the worst recession since the Great Depression. Potentially, it's also an election year budget. But first, I'd like to introduce you to Uncle Alan Madden. Uncle Alan is a well-known and respected Gadigal elder. And Alan, you'll be delivering the Welcome to Country today. Welcome.
Thank you. Once again, my name is Alan Madden, Gadigal elder. It's an honour and pleasure to be here today to welcome one and all to Gadigal. Distinguished guests, ladies and gentlemen, for my first song, no, only kidding. As we've all welcomed the countries, first and foremost, I'd like to acknowledge our Aboriginal elders, all elders, past and present, and pay my respects to all our Aboriginal and Torres Strait Islander brothers and sisters. From whatever Aboriginal or island nation you may have come from, welcome to where we are, Gadigal. And to all our non-Indigenous brothers and sisters, a very warm and sincere welcome to you to Gadigal. No matter where you've come from, whether it be across the seas, across the state, or across town, once again, a very warm and sincere welcome to you to Gadigal. And as I've mentioned many times before, was, is, and always will be Aboriginal land. Only three things shorter than that: coming, budget, and going. It's an honour and a pleasure to be here today to welcome one and all to Gadigal. Gadigal is one of 29 clans of the Eora Nation. The Eora Nation is bounded by nature's own, the Hawkesbury River to the north, the Pean to the west, and Georges River to the south. And in between those three mighty rivers is the Eora Nation. And in that nation, there are 29 clans. And the clan's land we're on today is Gadigal. On behalf of members of the Metropolitan Local Aboriginal Land Council and of the Gadigal mob, once again, a very warm and sincere welcome to you. And as you travel across these traditional lands and waters, may the spirits of our ancestors guide, look over you, and keep you safe. So once again, on behalf of Land Council and of the Gadigal mob, welcome, welcome, welcome. Thank you.
Uncle Alan, thank you. And it was on Ngunnawal land, in fact, here in Canberra, that the budget was handed down last night. So let me introduce now our guest speakers for today as we go through this. I'll be joined by Emily Sidney Smith. She's the CEO of ExoWorks, which is a corporate transformation consultancy. It helps organizations protect themselves against disruption and incorporate the attributes shared by the world's fastest growing companies and build new business lines with the aim of growing exponentially. Isn't that a grand idea? Emily shares practical, easy processes that she has successfully used with her clients to prepare them to survive and thrive in an era of accelerating change. Sayed Jahani is Grant Thornton's National Managing Partner for Financial Advisory. He has extensive experience working with corporates, financiers, and investors on all aspects of funding, with a dual focus on growth and turnaround. Sayed brings a wealth of knowledge around investment and market trends, how the federal budget might align to those trends, and what this will mean for organizations over the next financial year. We'll be hearing from both our esteemed speakers a little later on. Some housekeeping. Please do ask us questions. There is a question panel. You can put them in there, write them in, and we will address your questions during the course of the session. We're also going to be polling you. We're going to ask you some polling questions throughout the session. You'll see that appear in your right-hand panel. So please keep an eye out for those. And we definitely do want to get your output, your input, I should say, into those questions, get a sense of where you are on this. Well, let me begin with, I guess, my overview. and I have to say at the start, I can do no better than Grant Thornton's own budget analysis, which has been published. It's called Australia Reimagined. It's a document, an online document, which I hope you've got access to. It really is a tremendous, short, meaty summary of the implications and opportunities for business. It's commendably easy to read, and as someone who has done many budgets now, where you try to put these vast documents into something that's coherent and useful to people, it is, a remarkable achievement to put that out so quickly with such high quality. I do recommend you have a look through it. So my focus right now is going to be on the broad economic frameworks of the budget, the political environment that it seeks to address, the risks that are still very much there for Australia, and some of the spending decisions and what they tell us about where Australia is headed. And I'm going to finish up with my favorite innovation in this budget, and I hope at least some of you will be able to take up that innovation. That's a little later on. So let's look at the overall framework. First of all, debt and deficit. We have got in this budget a $50 billion improvement on the deficit from where we were just 6 months ago. That shows really how bleakly Treasury was looking at the COVID pandemic just 6 months ago. But still, even with that improvement, if you take 2021-22 and the 4 budget years that have just been delivered, we are looking at deficits set to total more than $500 billion. Now, that's 4 times larger than all the deficits that were run up by Labor post the GFC in raw dollar terms. 4 times larger. Net debt is set to peak at $980 billion, so just under the $1 trillion figure in 2024-25. Now, that's all borrowed money, and that allows some good chunky stimulus spending and some short-term tax relief to drive a return to fairly strong growth, 4.25% on the Treasury estimates in the coming year. But importantly, that growth figure drops back down again to 2.25% to 2.5% in the out years. So some are calling it a sugar hit. It has a bit of the feel of that. Critically, the money will help drive jobs growth. Unemployment is set to fall to 4.5% over the next 2 years. And that is really an astonishing figure for all of us, I suppose, who are still scarred by the sight of those queues of people outside Centrelink in just March of last year, that we are talking now of an unemployment rate of 4.5% within these budget years. So then what do we make of the debt? The ratings agency S&P Global has just overnight affirmed a negative outlook on Australia's AAA rating, and it says that is because that outlook reflects a substantial deterioration of fiscal headroom for Australia and a view on the part of S&P that risks remain tilted to the downside. That sounds pretty grim. Debt as a proportion of GDP is set to climb above 40% by 23-24 and will stay there, above 40% as a proportion of GDP. So when the coalition was accusing Labor in 2013 of leading Australia into a debt and deficit disaster, debt as a proportion of GDP was 13%, a third of where we're now headed. But we're told everything now is different, because what has changed is the cost of money. If you look at the front page of the Sydney Daily Telegraph today, the opening line is, "Australians all let us rejoice because money's nearly free." And fundamentally, the budget is worked on that very happy prospect. Even with a 17% annual interest bill on that nearly $1 trillion debt, the interest payments amount to only 0.7% of GDP. So that's the servicing of that debt, the interest payments, only 0.7% of GDP. That is less than half the cost as a proportion of GDP as we were paying to service our debt back in the 1990s. So one of the key critical assumptions in the budget, and this really does go to our fundamental health in the years ahead, is the assumption that even if interest rates, the expectation at some stage interest rates will rise, the economy at that point will be growing at a faster rate than that interest rate rise. And that means that debt servicing as a proportion of GDP will fall even if we're still running budget deficits. So that assumption, I don't know if I've explained it clearly enough, but you're all smart people. I think you do know what that's about. Really is the key to try to understand the long-term health of this budget. And the reason why some economists say we don't need to worry about these eye-watering levels of debt and the eye-watering level of debt as a proportion of GDP. And also, it should be noted that this budget forecast, although it's not obviously within the formal budget period, it has the expectation written in there that we will be running quite strong deficits deep into the 2030s. So deficits are going to be around for some time. So then what's the political context in which this is happening? This is a big government, big spending budget. The rhetoric is markedly different from what we have always expected and seen in the past from the coalition. Some people are saying somewhat snidely, this is the best budget that Labor has ever produced. Some of the spending, and particularly the tax relief, is expected to be short-term, temporary stimulus. There's 7.8% for another year of the low and middle income tax offset, and nearly $21 billion for the extension and temporary terms of full expensing and the loss carryback provisions for business. That is only temporary. Other spending in this budget, though, is hard baked into the system and will be a feature of budgets for many, many years to come. There's an extra $13.2 billion to meet the growing funding requirements of the NDIS. To no one's great surprise, that's turning out to be more expensive than the early expectations and the early models claimed. But Josh Frydenberg has committed the coalition overnight to always fully funding the NDIS. In the coming years, the NDIS will be more expensive to maintain than all of Medicare. That needs to be reflected on. There's also an extra $17.7 billion for aged care, with the promise to clear all waiting lists for home care packages within 2 years. And that brings aged care funding to more than $119 billion over 4 years. And that is a cost that also is likely to outstrip inflation for many years to come. There's also $2.3 billion allocated to new mental health services. An argument can be made that done properly, that's not only a good health and social investment, but it's also a good economic one because of the loss to productivity from unresolved mental health issues in the community. Also, another feature of the budget is the much vaunted Women's Budget Statement. This year, it got its own separate book among the budget documents. It's $3.4 billion in total. Half of that, though, is in changes to the childcare subsidy, with particular support for families with 2 or more young children in childcare. The women's safety spending is spread around a number of initiatives, but it notably provides almost nothing, $12 million over the budget years, for emergency accommodation for women who are fleeing budget. So that might be a sore spot that's going to be exploited in the coming weeks. What will Labor do with this budget? Well, you'd expect that they're going to pass most of it and pass it pretty quickly, given that, as they've argued, it is in response to issues that they have raised. This budget protects Scott Morrison from the most persistent charge that is made against him, that he is heartless and out of touch, particularly on social issues like proper aged care, disability funding, and issues facing women. Overall, the coalition is unlikely to lose any votes on its right flank because there are no political movements in Australia anymore that place a premium on fiscal austerity. The coalition has also taken a position now in the centre, which squeezes Labor. So to that degree, this budget gives Scott Morrison plenty to sell going into an election year, possibly later on this year. So let's look to the assumption, particularly the risks. Gone are the days of the Wayne Swan budgets and the early coalition budgets under Joe Hockey of heroic assumptions, which created rosy forecasts that were never met in reality. The assumptions are now on much more conservative footings. Josh Frydenberg is alive to the advantages of making grim predictions, only to then celebrate that things are much better than everyone expected. Under promise, over deliver, it's sound advice, and he's following it. A clear example is the assumption that the iron ore price will quickly head down to $55 a ton. Now, it's currently trading at 4 times that figure. The iron ore price could halve and still deliver billions more to the budget bottom line than is actually forecast in the document himself. It's just one of the examples of the conservative assumptions that are now being written into the budget. The biggest assumption, however, of course, is, well, it's the big one. And that is that we do not face any sustained new lockdowns from a new wave of COVID. It also assumes that the vaccines that are coming on stream will remain effective against any and all of the new mutations that we're seeing emerging in the virus around the world. But the Treasurer acknowledges that's a risk. It's just something that you've got to make your best guess at it and then proceed. On innovation, there is a whole bunch of stuff. I could talk about the traineeships, the job stimulus package in more detail, but there's quite a lot of good stuff in the budget about investment in the digital economy, artificial intelligence centers, high-tech manufacturing incentives. My personal favorite innovation shows what can be done with a nimble approach to tax policy. It's called the patent box, and it means that from July next year, new patents that are developed in Australia will be taxed at a concessional rate of 17% if the manufacturing continues to go on to be done in Australia. Now, that's a great little plan, because what it means is all the good ideas that come up in Australia, and this is specifically in the medical and biotech industries, if they are developed in Australia, not only does Australia get the benefit, but the people doing the innovation get a really good targeted tax break on that. There is a suggestion this might also be extended to the clean energy sector. The government hasn't made up its mind on that. So a brilliant little piece of policy detail that leaves us better placed to play a role in the industries that really are going to shape our world in the course of the century ahead. Many more details of the budget. It's a big document we'll doubtless tease out during the question session, but that's just my overall assessment of it. So let me introduce you now to our next speaker, who's going to tell you how you're going to make yours a better business in the context of this new budget. Emily Sidney-Smith is the CEO of ExoWorks, a corporate transformation consultancy, which helps organizations protect themselves against disruption. And the key thing is that she helps those companies identify the ways in which the most successful companies in the world are doing right now, and how you can bring those into your own business. Emily Sidney-Smith, over to you.
Thank you so much. If I can leave everyone here with one impression today, it's that this is a once-in-a-lifetime opportunity for Australia. Australia is so incredibly well placed right now. This is a once-in-a-lifetime type of budget. We'll probably never see it again. And there's so much that can be done if we're clever about it. And so I want to talk through some of the things that we're often not thinking about. And so let me start with this budget, because the government is really giving us a whole lot of opportunities, but then passing us the baton. And so what should we think about now? So they've said, yes, lots of capital is available. They've done all these things like the tax write-offs for assets. But if we've got all this money sloshing around the economy, are we spending it well? And I want to focus a lot on that in this presentation. Of course, we must digitalize. But we must also remember that that's the third industrial revolution. Yes, we must catch up. We must overtake other countries to do this, but we must also think about the other technologies that are coming down the pike at us that are the fourth industrial revolution technologies that we can really be winning in. And then, of course, as Hugh said, this discover, commercialize, and manufacture here. So some great incentives to do that. But it's really hard to actually get beyond this chasm of death that happens between inventing something and then actually getting it out to market. And so as businesses, we need to really look to overseas, to some of the examples of where it's happened well, and bring that kind of expertise into Australia and be able to actually really truly do that. And I hope that they will actually expand that tax break to other areas, because we really should be thinking beyond medical and biotech into all sorts of fourth industrial revolution kind of technologies there. And of course, decarbonising the economy is vital. But I also think Australia is well placed to be the absolute leader in doing this. And if we can prove up these technologies and the ability to do things here in Australia, then we can export that expertise to other countries. We're working personally with 3 of the largest emitters here at the moment, and it's amazing what can be done. And if we can only just prove this up, we could truly export all of that expertise overseas. So the topic of this is Australia Reimagined. And I really want people to think very audaciously and broadly about what that means in this follow-up to the budget. So we're seeing two completely different kinds of companies these days. There are the disrupted companies, those that are often very traditional in their thinking. They think that if they innovate and just incrementally do things 10% better, then that's fantastic. And yet there are all these other companies out there that we're now calling exponential organizations that are thinking completely differently. They won't approve anything unless there's a tenfold improvement in what they're doing. That difference between 10% and 10 times is so huge a chasm that traditional companies who are not thinking in this way will just get wiped out. But they're also asking really different kinds of questions, these exponential organizations. And by the way, many of them are smaller companies. So if you're a small or medium-sized company listening to this, the ability to be nimble, to navigate uncertainty, and really bring in new technologies because you don't have a whole lot of legacy systems is really crucial to be able to grow in this kind of way. And so about 5 years ago, we looked at the fact that there were these fastest growing companies in the world that we'd never seen the likes of before and said, well, we actually think there's a whole new business model here. So let's work out what's shared between those companies. So it turns out that these 11 attributes are what actually drive those companies. Why did Amazon or Google or any of those companies become so powerful? Well, it's these attributes. And so if we bring these attributes into our existing companies, we can start growing them as fast. And what I also want to say here is that they actually make it easy to scale. They're often involving the suppliers and customers and getting them to do a lot of the work for you because they're winning so much from actually being involved. And so I'm going to tell some case studies of how we've brought these attributes into some large companies around the world as we go. But I also want to talk about corporate innovation because there's been this copycatism around the world that is really not working. So over 72% of corporate innovation is failing. If you look over the last decade around the world, that means $3.5 trillion wasted. In the meantime, big tech has actually created double that value. And so we need to actually stop doing what's not working and see that there are actually ways that are really proven that truly do work consistently and move to those different innovation methods. So what are we really trying to do? Well, most companies really think in the linear way. They might be on that grey trajectory, just growing a little bit. They're trying to get up to that blue line. They're doing those sort of basic digitalization projects. But there are all those companies, as I say, who are on this exponential purple curve. And so how do we get companies onto that curve? Well, one of the brilliant things that's happening at the same time is that there's an exponential drop in the price of a lot of the technologies that are coming up around us, at the same time that the quality of what's on offer is actually increasing exponentially. And so if we can actually utilize that, we can, and these new business models, we can really get companies growing. And if we can do this across Australia, just imagine what is possible. So when we actually start to think about incorporating these ideas, what we typically find is initiatives where you can spend under $10 million over 2 years, and they then throw off at least $100 million in value per annum. So just huge return kind of ideas. If you think audaciously, if you consistently say, what is a 10x? How do I solve a customer's problem tenfold better than the current way of doing things? And so we've worked with very large clients around the world, and I'll talk about a couple of these ideas. But what I want to really highlight here is it's not just digital companies, it's very physical based companies as well who can really, really benefit from this kind of thinking. So let's talk about that different kind of thinking and asking very different questions. So we worked with Procter & Gamble about 5 years ago, and they asked us to fix their invoicing system. Now, typically a company would say, well, there's all these different invoicing systems out there in the world, which one is best? But we said, let's go a bit deeper and say, what is the problem that we're trying to solve? And what are the different ways that that could be solved? Maybe it will be an invoice, maybe it's not. And in fact, they said, hey, we think that this invoicing stuff is actually obsolete. It's just a legacy process that we never thought to get rid of. In fact, all we need to do is put a sensor, it's very cheap, 1 cent, into every box, and a sensor reader in all of the facilities. If a box goes through that sensor, someone gets paid. They got rid of $100 million worth of invoicing by just thinking differently. And so if you're a business today, you could actually spend an hour with your people and say, what's obsolete here? What don't we need to be doing? What could we just get rid of? How much time would that free us up so that we could actually be thinking about innovation? So let me tell you another story. I told you there are these very small investments that can have these huge returns. So a lot of companies are thinking very much about renewables and decarbonisation. So we were working with one of the biggest polluters in the world, and they were already about to make $2 billion worth of investments into renewables. But when we looked at their pilot project, their emissions went up. So it took us a while to work out what was going on. Well, they were putting intermittent energy on, and they weren't comfortable that they actually understood the supply and demand. So they were keeping all the backup spinning reserve online, which was diesel. So you can imagine why those emissions were going up. So we found a way to actually just spend $6 million on top of that huge $2 billion spend to put real-time software in there that really gave them the confidence of what that supply and demand would be. When you can do that, you can take 60% of that backup spinning reserve offline. That's 12% of their total power emissions. That's $300 million in savings per annum on fuel costs. So if you think differently about these kinds of ideas, you can find very small investments that have just a really huge return. Now, if you're thinking about whether your company, or maybe a company that you're thinking about investing into, actually has some of these ideas in it, have they actually brought in those 11 attributes that are shared by the fastest growing companies in the world, you can do this really quick survey. You'll get all the answers emailed to you. We often see companies doing this yearly to see their progress, and it's amazing to see what's possible. Now, the best example that we've ever seen of an organization actually deploying these 11 attributes is actually the Australian government's COVID response. Okay, so the vaccine rollout may not be fantastic, but wow, it's amazing what was achieved in terms of flattening that curve. And so if we think what was happening, so the massive transformative purpose, why are we doing this? Flatten the curve. But then they said, there are these amazing groups out in the community that are really good at all of the things around a pandemic. We're not going to try and control them. We're going to leave full autonomy, but we're actually going to ask them to bring advice to us in real time through interfaces. So there was a digital aspect to this. We then manage it internally through our dashboards. We bring that real-time information up to a group that makes decisions and gets it out to the community and crowd very quickly, and asks the community and crowd to come along the journey with us. Now, of course, there was the COVID app, COVID Safe app, which is an algorithm, hasn't been used as much, but amazing to get that done in a couple of weeks, leveraging the assets and staff on demand out there in the community, and 6 million people signing up within a month. Software companies would have their minds blown to have that kind of thing going on. But right through this, they were very clever about how they rolled it out and bringing everyone along. And so we say, if a government in one of the biggest crises in however many years can do it in a couple of days, pull this together, well, no other organization on earth has an excuse not to do this. So let's also think macro. Over any 25-year period, generally GDP doubles. So it's about 90 trillion around the world at the moment, which means that there's $90 trillion worth of new value to be created over the next 25 years. But if you look at the existing industries, they're likely to fall in value. So if you're in any of those industries that are traditional, you should be worried very much about disruption. So that means that at least $90 trillion worth of new industries are going to be created. And it drives me nuts when we see countries like Australia very much focused on how do we win more market share in those existing declining industries, rather than saying, wow, there's this huge opportunity to actually go create those new industries and dominate them and then export our expertise over to international areas. And so as companies, I'm really encouraging you to think very differently how you can actually be part of creating those new industries. Now, where will those industries come from? Well, we've never lived in a time when there are 15 technologies all going mainstream at once. Usually there's one or two. This is an amazing time. Every type of this technology will revolutionize our lives. It will be part of our everyday lives in the next 3 to 5 years' time. And so if you're not thinking about how you can incorporate these into your business, then that's a real missed opportunity. And if you're not thinking about how these technologies may disrupt your business, that's a recipe for disaster. Well, let me give you an example of, and I'm sorry that that video is not working, of where we actually worked with a fantastic company, Boston Scientific. And what they realized was that they sell lots of heart stents, but they don't sell that many in rural areas, especially around the world in emerging markets, because it's very expensive for a doctor to come to a big city and get trained, and they're leaving their practice behind that's often just inundated with patients. And so as they're trying to train surgeons on putting in these heart stents, it often doesn't work to have a video or something. It's not enough. And we said, well, what about virtual reality? So they experimented. Experimentation is one of the very important parts of exponential organizations. And what they found was that they were actually getting a better result in terms of training than the in-person version. And so at a very small cost, they actually put this program together. Within a month, they were training 20 times as many people at 5% of the usual cost. Their sales of heart stents went through the roof, and saving lives went through the roof. So just a win-win-win all around by thinking how technology can be brought into companies. Now, those technologies, we often think of them in a very linear fashion, which is why it's very easy to get blindsided by these technologies. And yet, we often think about the fact that there's Moore's law and that computing power is doubling, but there are all these other doubling patterns all around us. All 15 of those technologies I mentioned are on these doubling patterns. So if we think about just 8 years out, 21 times as much computing power, what would you do with that? What does that world look like? I mean, that's fundamentally different, let alone 128 times as much brain imaging, the genomes, the drones that are around us. This is transformative. We need to jump on these opportunities and really enjoy them. Now, someone who is fantastic at knowing how to jump on these opportunities is Elon Musk. He doesn't think linear. He thinks, I know that these technologies aren't ready for prime time right now. They don't quite work, they're ugly, they're too expensive, but in 10 years' time, they're going to be cheap enough and the quality is going to be high enough that they can be part of our everyday lives. And so I'm going to design a company that will intersect that exponential curve. And he's done it in industry after industry. Shouldn't we be thinking this way? And so we often see companies very much focused on their existing businesses. Now, almost every business that's out there is highly commodified, highly competitive, often highly regulated. And a lot of them are becoming increasingly obsolete as we see very innovative thinkers saying, well, we want to solve a customer problem. Is there a way that's tenfold better at doing that? And maybe it's not the old traditional company's way of doing it. So we're seeing the companies that are only incrementally innovating, it's just like throwing dynamite on that ticking time bomb. And those companies very much getting disrupted and blindsided. So instead, let's think about this as the Australian century. What if we actually said we could build these new industries, we could create them here and then dominate them from the rest of the world? What should we create? So we're actually facilitating groups to actually come together and say, well, which industries should we create? And then actually go and do this. If you want to be involved, please let us know. So let me give you another last example of companies that just think really differently. So we were hired by Rosini, which is the biggest car brake manufacturer in the world. And I'm telling this story because it's such a physical product that they're talking about. Now, they doubled their value in 2 years, thinking differently and using these attributes from the fastest growing companies. Now, they were about to make a $100 million investment in an expansion that was actually fairly difficult. They really didn't know whether they were going to make a return out of it. So we said, stop that. Let's run lots of small experiments and work out what truly will work. Now, they found a way to invest a fraction of what they originally would have and be very comfortable that there was going to be a $100 million a year business at the end of it. But they also managed to bring down the costs of their prototyping, the time that was involved, $80 million cost reductions in different areas. They really transformed the morale and productivity of their workforce, just thinking really differently. And so let me leave you with some questions. What if Australia actually creates and dominates a new industry? What should that be? What if we only ever approved projects that had a tenfold outcome? What if we all adapt the business models of those fastest growing companies in the world? Can you imagine what Australian business would look like? If you relaunched your company this year, how would it be different? What would you try and achieve? What obsolete practices would you have removed? And if you were tasked with improving the lives of millions or billions of people, what would you build? What would you do? What would you achieve? And so please think big. This is an amazing budget that is really business friendly. The government is handing us a baton of almost free money and all these opportunities. Let us go and create them and not just invest badly in trying to all crowd into the same highly commodified industries. Let's go and create something new. Thank you.
Emily, thank you. What a great speech, great presentation there. For someone who's living in a highly disrupted industry, free-to-air television, I kind of feel myself rather on the back end of the burning platform. But nevertheless, there are all kinds of opportunities out there, and you've framed them superbly. Thank you for that. We'll come back to you for some more questions at the question session. On the subject of questions, we're getting quite a few questions coming through, and thank you for those. Keep them coming. There are some technical tax questions that are coming in, and just a tip, we do have a specialist tax seminar that comes on immediately after this one at 1:30 Eastern time. So you probably might be better to save those technical tax questions into that later seminar from 1:30 Eastern time. We also have, I remind you, a poll that you can answer. The question is, do you think the government has focused on mid-sized businesses enough in this budget? We're getting numbers coming through. I won't tell you yet what they're doing, but there's a trend line emerging, and but please do take part in that. Let's take a market and economic perspective on this budget right now and bring in Saeed Jahani. As you know, Saeed is Grant Thornton's National Managing Partner for Financial Advisory. He's been up overnight, poring away over the budget details. What have you found, Saeed?
Well, good afternoon. Thank you, Hugh. And wow, Emily, that sounds incredibly exciting. But if I'm a little honest, a bit scary at the same time. I think we all want to know more about how we can be of a business that's growing at 10x instead of 10% of X. So I suspect you will get some questions on that in the Q&A. Ladies and gentlemen, from my perspective, I want to share with you my views around some parallels I took away from the budget last night to what I am seeing happening in real time on the ground with businesses. And there are two key themes I'm going to touch on in this respect. And they are, one, the abundance of liquidity, and two, the booming levels of confidence out there. So let me start by saying it's great to see the government not shy away from a spending thematic in this year's budget. Pre-COVID, all we heard about from this government was getting the budget back into surplus. But with interest rates at close to zero and monetary policy basically no longer an option, it does really come down to fiscal policy in terms of how the government can manage our economy. Now, the big spending approach by the government through the pandemic and to a certain degree again in last night's budget goes a long way to restoring confidence in our economy and maintaining and hopefully increasing levels of business activity. We've seen the various business and consumer confidence surveys put out by all the big banks showing a strong bounce back in confidence levels. I've seen this translate directly with clients and businesses that I talk to every day. Boards and management teams are more confident now and looking to invest or undertake strategic mergers or acquisitions to grow their businesses. Now, if I could just turn to the liquidity point. Now, whether it's a hangover from the various government stimulus packages or bounce back in revenues to pre-COVID levels sooner than imagined, or banks willing to lend again at record low interest rates, or investors, private or public, looking for yield, when you combine all those factors, what we've seen that means for businesses is that they have access to cheap and flexible capital now more than ever. But this abundance of liquidity is not necessarily just coming from external sources. If I can share with you an anecdote around one of the silver linings to this health crisis that I saw emerge early on, and it does tie back into some of Emily's comments around thinking differently. At the onset of COVID, businesses were going into crisis management. I'm sure we can all relate to that if we cast our minds back some 14 months. None of us knew how long or how deep this downturn or recession was going to last for. Management teams and boards suddenly had that burning platform. And with that burning platform, it really created an impetus for change. Now, my day job is a restructuring partner. And one of the challenges I often find when talking to management teams around trying to drive a business turnaround is creating that impetus for change. But literally, businesses had to fundamentally make changes overnight because it was a matter of survival. So as a consequence, I saw a lot of businesses refocus on their core offering or find new innovative ways to do business or reframe their overhead structures or try to eliminate duplication in processes or systems that may have crept in over several years or re-examine how they were using their balance sheets more efficiently. Put another way, they became fighting fit. And so to some of Emily's comments, I think we have the capacity to think differently, and we've done that in the past. It's really trying to take that to the next level. Now, fast forward to today, a lot of those same businesses have seen their revenues bounce back, and of course, there are always exceptions depending on the industry, but it doesn't take a rocket scientist to work out that with a leaner cost structure, but a similar revenue base, you're going to make more money, and that is that silver lining I refer to. So then the question comes, what do you do with all that additional liquidity? And I'm seeing a couple of connected themes emerging here. Firstly, some businesses are taking that opportunity to use that liquidity to invest and grow. They're looking to acquire a competitor or expand through CapEx. Secondly, other businesses are saying, look, we're making more money and more profit than we ever have. Is this the right time to maximize the value of our business and take cash off the table and look to sell? And there's no shortage of potential buyers lining up. As Hugh mentioned, I run the advisory practice here at Grant Thornton, and we've seen that come through in our own business. Our M&A teams, our valuation teams, our due diligence teams, our IPO teams who are helping clients do deals, make investments, respond to unsolicited offers to buy their businesses, are running at levels that now exceed pre-COVID times. That's from a deal activity perspective. Now, I should add, for those of you thinking about buying or selling, I would recommend some mandatory reading. If you jump onto the Grant Thornton website, download a document called Deal Tracker. For the last 10 years, we have tracked every deal and looked at the sectors that are running hot and the prices that buyers are paying for businesses. Before COVID, we'd seen one of the strongest 6 months of deal activity, not just from a volume perspective, but also from a pricing perspective. Average multiples were running at 8 times EBITDA. Now, obviously, that all came to a screeching halt during the first 3 to 4 months of COVID, but it has picked up with significant momentum. I might just call out a couple of sectors in particular where we're seeing some really strong interest, which is also flowing into some really strong pricing being paid for those businesses. And they are healthcare and technology. And again, using technology differently or trying to bring technology in to enable your business, I think goes to some of those 10x type situations that Emily was talking about. Again, for the obvious reasons, these are sectors that are running hot given the last 12 to 14 months that we've just gone through. But importantly, when I reflect on last night's budgets, both healthcare and technology are definitely winners in last night's budget. So look, on reflection, I do agree with the Treasurer that the private sector has an important role to play in helping pull the country through this recovery. And from what I'm seeing, I think the private sector is doing its bit. The tax incentives to encourage investment by the private sector, combined with all the funding for education and training to create those extra 250,000 jobs, will provide that natural dividend to the government over the long term to assist in reducing that deficit. And Hugh touched on this in his opening. The deficit is obviously a sensitive subject. Yes, it means we are kicking the austerity can down the road, and will future generations have to pay the price if interest rates start to climb on that $1 trillion debt figure that Treasury is assuming our national debt is going to climb to over the next few years? Well, all I would say on that in conclusion is it is a real balancing act to get that right. But as you have probably heard, and as Hugh touched on, we have in Australia debt levels and an interest bill that from a percentage of GDP is relatively modest, especially when you compare it to many of our OECD peers. And in my humble opinion, I think is reasonably sustainable. Thank you, and back to you, Hugh.
Well, thank you very much for that, Saeed. We're getting a lot of questions coming in, and I appreciate everyone who sent them in. We'll try to get through as many as we can, and they cover such a range of issues. If I can go to the patent box, a few questions that have come in on this. The point has been made by someone, by the way, that the Britain has had a 10% tax rate on its patent box equivalent and has had it in all sectors since 2013. A question that's come in is, do we have any further insight as to the likelihood of this being applied to clean energy initiatives, particularly seeing the government has taken a relatively dismissive attitude towards electric vehicles? I don't know if you want to chime in on that at all. I'm happy to field it myself, but Saeed, if you've got a view on it at all.
Look, I think it makes sense for that to happen. Again, the political piece to that is going to be quite important, and there's obviously different stakeholders who will be lobbying hard for that. I think the broader we can open that patent box to other industries, the better long term it is for Australia's future.
Emily, your thought?
That's really important, and I don't know whether they will extend it, but other things that are really important when it comes to decarbonising are the government actually giving some real certainty around carbon prices, around what will be counted. It's incredibly hard for companies to actually work that out. The companies we're working with at the moment are really scrambling. They would love to make big investments, but they can't until they get some government certainty.
Interesting. I heard Jennifer Westacott from the Business Council saying much the same, that there's a lot of private sector interest in advancement in this, but they really do need further signals. I say it doesn't always amount to money coming from the federal government, just some stronger signals as to where the policy settings are going to be. And I did note with Josh Frydenberg last night with regard to this patent box extension into the clean energy sector is that he says he will be consulting on expanding it. And the political difficulty there being a little bit that if tax benefits are seen beginning to be delivered towards a clean green future, that there could be some squawking from elements from within the coalition, some of those from Queensland, some of those in the National Party in the past, who complain about preferential treatments being given to clean technologies that are being withheld from those older forms of energy that they perceive as still being essential to the future of the country. So there'll be consultations, but watch that space. Just quickly, I guess back to you, Emily, do you think it should go? Why don't we have a patent box across a whole range of technologies and future technologies?
Exactly, we should. And if you're only focusing on a couple, you're saying we don't care about all these other fourth industrial revolution technologies. We should be really saying, let's open up to Australia and see what innovation is out there and support all of it. Because especially it will actually be the intersection of a lot of technologies that actually create something that is a really great product. And if we're not supporting that kind of convergence, what a missed opportunity.
Okay, another question that's come in is, what do we make of the fact that we are planning to keep our borders shut until mid-2022, restraining our migration and hampering recovery of Australia's $150 billion tourism industry? That's the question. Saeed, there are plainly still constraints on the government, on the budget, on the wider economy from COVID. Are they reasonable assumptions, in your view, from the government as to where Australia will be in order to be as strong as it can be as we emerge from the first wave of the pandemic?
Oh, look, it's a good question. I mean, this has always been the challenge that the government has had to manage throughout this whole crisis. Getting the health solution right alongside the economic solution. And look, on balance, I think they've done a pretty good job, from a health perspective and an economic perspective. But how long can you keep those borders closed? I mean, one of the other things I didn't touch on that is becoming a massive constraint for business is the lack of skilled labour. Without that net migration into Australia, a lot of businesses are feeling constraints around being able to find the people to help them grow. And the longer those borders stay shut, that will still be a drag on our economy. Now the flip side is, well, yes, the tourism industry is still suffering severely, but we've also seen that with our own residents not going overseas and having more money to spend domestically, there is a bit of a sugar hit from that spend domestically as well.
Indeed, there is something in the budget about there being some visa access to specialist skills to try to bring them in. So as the borders slightly open up, plainly that is a priority issue that the government has acknowledged in there, but the numbers are not clear. And Josh Frydenberg makes plain that the whole thing is built on there not being more lockdowns within Australia. So we can presume those borders are going to stay pretty tight for some time to come. A question on what is the Grant Thornton view on the government stimulus for the aged care sector, and is there a greater requirement for structural reform in the centre, Saeed?
It's a good question. I'm not going to pretend to be an aged care expert, and what I would say is that we do have an aged care webinar that will follow immediately after that, which Daryl Price, our aged care industry leader, will be hosting. I think and we touched on this in that publication that Hugh opened with, that we've issued overnight on the federal budget. I think our view is we welcome the additional spend on aged care in the federal budget, but we think it could have gone further. And with that teaser, I'll let people log into the webinar after this one.
Good teaser, love it. I should note that there is one of the aged care provisions is for an additional payment of $10 per resident per day to the residential aged care sector. So if you're running an aged care facility, that you're getting an extra $10 per resident per day. The complaint is already coming. Well, it doesn't actually say anything about improvements. It just says you've got those numbers, here's some extra money. It's not tied to any it's not saying that's necessarily going to go into hiring more staff or other things. It may do, perhaps it should do, but there's nothing stopping it really going to the bottom line effectively. So some more conversations that will take place around there. A question for Emily. Considering the Australian SWOT analysis, which new sector among your 15 industry sectors do you think Australia should focus on?
So if I were betting, I would actually say that the genomics area and really doing amazing things around longevity and health span. We focus so much on if someone's sick, let's fix it. We're getting to the point where we can do very personalized medicine, where we can do preventative medicine. I think Australia is incredibly well focused to do that and to export it to the rest of the world. So I would focus there. I think that advanced manufacturing is going to change dramatically in the future. There's all of these new technologies around 3D printing and various others, and various new materials that are being created as we start to actually bring together these amazing databases where you have thousands of different molecules that you can actually start to put together in digital aspects and say, well, what actually will solve the customer problem best, and then only test those top 5 or 10. So the speed at which we can actually come up with new materials and new medicines is going to be so huge. We should be really leveraging those two industries very fast.
Slade, if I can, a question here that draws back to your presentation. What are the budget highlights, if you could further expand on them, for SMEs, companies, the question says, that don't spend $100 million or even $20 million on development initiatives?
Yeah, I think probably the one that really stands out for me, or the one or two that really stand out for me, is the extension of the eligible capital write-off for small business. That now has been extended to June 2023, so you don't need to depreciate those capital assets that you'd be buying over a number of years. You can write that off in 1 year and get a tax benefit from that, as also the carryback losses as well. So we've seen that in a number of our clients where early on they may have had some losses during that COVID period, being able to offset that against historical profits to get a potential tax boost. So they're probably the two that I think affect most SMEs, and I encourage them to explore those and make the most of those.
Do you think that's a permanent fixture now? It's turned up now in a couple of budgets. It's a sort of a year by year drip feed type of thing. It plainly is popular with small business, small to medium enterprises. Do you think it's one of those things that in practice is going to be just one of those things that treasurers are just going to want to put up?
Potentially. I mean, it's a good question. Again, without crystal ball gazing too much, I think they've costed it out about $20 billion in this year's budget, those two initiatives. So it will probably come back down to affordability, I suspect.
The questions here on tourism again. People obviously who are exposed to that industry that's taken such a hammering. Recovery, this questioner says, cannot be based on domestic tourism alone. What is in this budget, to your mind, Saeed, that is going to keep those tourism, aviation, smaller operators going?
Probably not enough is the answer to that question. I mean, they have announced a number of initiatives around, and we've seen this, half price or subsidized airfares, and there is some limited support to businesses in affected regional areas. But you're right, in certain tourism spots, especially once they go through the seasonality. So if I look at far north Queensland, once they get through the peak seasonal period, it's looking pretty grim for them after that. And the reality is, I don't think the government has done enough to support those businesses.
More questions on the electricity sector, moving away from fossil fuels. The questioner says, is the focus on hydrogen and carbon capture just prolonging coal and gas? It really isn't so much a budget question in there, I suppose. But does this, I suppose in terms of innovation, Emily, does this budget give a clearer signal as to what the government sees as the future of these energy components?
I think it's very vague on the detail in terms of that, but it is great to see a focus on hydrogen and carbon capture and storage. I think both of those are incredibly important. And so if we look at carbon capture and storage, we're working with 3 large companies on this at the moment. And what a lot of people don't realize is that you're actually enhancing the recovery from your oil and gas wells by doing this. So you're essentially putting CO2 down into these reservoirs, which will capture it probably longer than if you were doing planting of trees or any of these other things. So a fantastic way of doing it. The problem is, how do you get those carbon, the CO2 to the right place to inject it? Australia has some of the best reservoirs for doing this at the cheapest cost. So it's a real opportunity for Australia, but we should also be exporting that idea. Hydrogen, fantastic, but really difficult. It's 1/6 the energy intensity as gas, which means it's really hard to transport. You're essentially doing gas and then doing something else, which makes it more expensive. So some really difficult things that are only going to be working when, as I say, the government helps with that certainty around carbon prices and what they're actually going to count as carbon credits. So I would rather see that kind of certainty than some of the other budget measures that they've taken.
A question for you, Saeed. This is the unanswerable question. With all this liquidity you talk about, is now a good time to sell my business and cash in?
I think the answer is it depends. Especially for a private owner, it can be a very personal decision as to when is the right time to cash in, so to say. Look, there's definitely strong interest across a range of industries. I've called out a couple there in my presentation where pricing is actually very strong. What I would say is, if you are thinking about it in terms of trying to maximize value, there can sometimes be a bit of a lead time to prepare your business for sale. And depending on what your circumstances are, that could be 3 months, it could be 6 months, it could be 12 months. So my suggestion would be engage with your hopefully Grant Thornton advisor and reach out and have that first conversation to get a sense of whether or not what you need to do to prepare for that. I think one of the questions a lot of buyers are asking at the moment when they are looking at record profits and sellers or vendors wanting to cash in on those record profits are, is that record profit sustainable, or is it just a sugar hit because you've had all this government stimulus and benefit? So that different way of thinking that you may have implemented to address that burning platform, have you been able to get that to stick so your profits now that you're making are sustainable, so that someone will pay you a multiple in excess of what otherwise would have been the case pre-COVID for that business.
Okay, getting lots of questions coming in. Thank you to everyone sending them in. Another one for you, Emily. What are your top predictions for the next 2 to 3 years for innovations that will affect Australia?
Great. So my top 2. So first of all, I think a lot of companies have bought a whole lot of software and now it's not playing very well together. So there's this spaghetti ball of different data across most companies. In fact, we're seeing about 20% of labor time going into putting in data. And yet most people will say that there's not good insights coming out of the other end of that data. So I think that we'll see a big move to actually putting a dashboard on top of all of those different systems that everything else plugs and plays into, so that companies can get some really good insights and not be wasting that 20% of their labor time. And then secondly, I think that a lot of companies will automate. And so we're seeing that skill shortage, especially when we're thinking about blue collar labor that might not be here on our shores because we can't access it. That automation will happen and those jobs will never come back. So I think that companies that can actually jump on that, find out how to do it and not have that skills shortage will really benefit.
A question, I think this is a lot of companies in this situation. What are the first steps, Emily, that companies can take towards, 10x innovation?
So we really need to think very differently. And so I would actually spend time with your team actually thinking about what's going to happen in 10 years' time. So choose some of those technologies, put one of those technologies in the middle of a piece of paper and then draw arrows to all the secondary and tertiary effects on all sorts of different industries and community and economics that those technologies will have work out what that will be as an effect to your company. Think about the underlying talents and resources that you have as a company, not just what you do as a product, how those can be leveraged in new ways. Think about how you can bring in those attributes that are shared by those fastest growing companies. There's a lot of information out there. We've outsourced all of that information and open sourced it. So I would start with those, get to the point where your people can actually think in a different way about how fast the world is changing, and then say, right, if there's one tangible thing that we can do in the next month, what would that be? And then keep on going from there.
Saeed, for you, a question regarding the education industry. How does Grant Thornton, what is its view of the education industry? Obviously, hugely hit for international.
Yeah, I'm looking. It's a critical part of our economy, and obviously, depending on how you break it down into its sub-segments, universities, training organisations, schools, they all play a pivotal role. Again, I think the government has been well considered in this budget in terms of being able to offer more funding for training, for apprenticeships, and using the education industry as the medium for which to make that happen. But again, there are always going to be winners and losers, and interestingly, a number of the training colleges who relied on international students and our universities who've relied on international students are still going to suffer from the borders being closed. But having said that, some of those businesses I've found are some of the same businesses that have been able to reinvent themselves when that burning platform occurred, and in the way they decided to go virtual in terms of how they delivered a lot of their services, as opposed to the typical classroom fashion. So those businesses, there will be businesses that fall by the wayside, but those who can innovate and change and use technology in their delivery system will be the ones that thrive.
Emily, on education?
So I completely agree with Saeed. It's all going to be about innovation. In fact, I think this will be one of the most disrupted industries over the next few years. What we're seeing is that education hasn't actually asked industry what skills are needed. There's not this demand pull through of what should be the training. And so we're seeing companies like Google and Amazon saying, we don't care about a university degree. We'll actually put you through our short courses and we'll test that. In fact, those companies are so big that if they're actually going to keep up their share price growth, they need to double in the next 3 years. And that means that they will be going into whole new industries. The third biggest industry in the world is education. It's the first one that is a services kind of industry, which is more suited to what they do. So we're seeing already those large big tech companies actually going into education. I think that they will hugely disrupt education. You'll see the Amazon U, the Google U kind of taking over. And so in fact, a lot of the conversation about can we attract more international students here is perhaps the wrong conversation. We should be saying, this is going to be completely blown open, completely revolutionized, and are we set up for that new world?
All right, a question on property. All this money is around, plenty of liquidity. It's been flowing into the housing markets big time. There's also more stimulus in the budget towards this, or at least efforts to get people who've been on the fringes of being home buyers and getting them into the market. What's your prediction with all this money flowing in, more stimulus to get it going? Where's that heading, do you think, Saeed?
Well, look, it depends on which, again, property sector you look at. So residential property sector, which is obviously close to everyone's heart. I think we've seen some phenomenal growth in property prices. What the government's trying to do with making housing more accessible, especially for those who may struggle to get that initial deposit, I think is positive. But does it add more fuel to the fire? Possibly. But is it in areas and regions where it can be sustained, where there's a lower level of pricing to make it easy to get into? I think the reality is, whilst net migration and the borders are closed, that is providing a bit of a relief, typically in terms of house pricing for apartments, and that's one of the reasons you've seen apartment pricing not grow as strongly as house pricing. But the reality is, there's no there's no relief mechanism that would suggest to us that, you know, housing prices are going to moderate. In fact, you know, there is a historical link between unemployment rates and housing prices. So, you know, the government's push to drive down unemployment to below 5%, when you look at that link, would tend to suggest that then housing pricing is actually going to increase, not necessarily decrease.
More work for the bank of mum and dad if it hasn't already gone into getting the kids into a house at some stage. I'm expecting the knock on the door at any time. A question to you both. Do you think that the budget focus is chiefly short-term? Or is there a long-term view? If one day Australia's mining boom ends and interest rates rises, do you think the economy will be able to serve a $1 trillion debt well? Emily, do you have a view on that?
I think this is a stabilization budget. This is one that in many ways is very safe and sort of plugging a whole lot of holes and really enabling the private sector to actually do the work, the heavy lifting. And so we now need to actually take up that baton and say, okay, well, we are Team Australia here. I know that there are huge numbers of people on this call who are business leaders. We are Team Australia business, and we need to actually say, well, let's go and create these new industries. If it's not us, who will? We need to create that tax base that is going to be able to pay off what is really important in a budget right now.
And so,
I tend to agree with Emily. I mean, eventually one day we will run out of iron ore, we will run out of coal, and, you know, we won't have anything left to dig up. And I think, you know, that's been, noticed some time ago by government. In fact, if you look at the growth in our services industries over the last decade, you know, that's been phenomenal. You know, financial services, education, these have been growing at sensational rates, you know, as we've tried to pivot more to our strengths. I think to Emily's point, you know, we now need to think about what are the other new industries. You know, we've done it before, we can do it again, but we can't necessarily rely on, you know, old industry or old technology to get us through the next decade.
A question on employment subsidies and support for apprenticeships and traineeships, seeking more information, including any restrictions on business eligibility. Saeed, have you been across this?
Look, I'm probably going to pass on that one. I'll probably refer them to our tax specialist seminar straight after this one, rather than trying to give you a steer that's not in the right direction.
Emily?
I'm not an expert either, I'm sorry.
I'll just say that on this, off the budget, that there's a promise of more than 450,000 new training places that's been offered, a cost of $2.7 billion to create 170,000 new apprenticeships and traineeships. And there are some other sorts of, you know, I don't like the phrase, but rats and mice little elements that are in there to try and shore up in particular areas. One of the areas in aged care, for example, is a plan for there to be 33,000 funding for 33,000 traineeships for personal carers. Doubtless a job that's vitally important, but one of the issues there is where are those people going to come from? I can tell you that my older brother, who worked in sort of middle management for sort of big companies, and then in his late 50s decided, after the experience of looking after his mother-in-law who was ill and aging, that he retrained as a personal carer because he liked the satisfactions that went with that job, and works now in an aged care home. God bless him. He works a 9-day fortnight. He covers all the shifts. And in the last financial year, his takings were $39,000 before tax. Plainly, one of the problems, it's one thing to say there are 33,000 traineeship positions there, but it's very low paid and very hard work. My brother says it's the most satisfying thing he's ever done, and he's not certainly doing it for the money. But there is that issue that there is one thing to have trainee positions in some of these areas, but the money is something if you want to bring more people in there. There's also a question, what are the budget implications for NDIS participants and providers? I don't know if you want to weigh in, by all means weigh in on the panel, but my understanding of it is that really fundamentally there are none, except that the government plans to fully fund it. And what there was happening there was a funding lag in the NDIS, and by putting in this extra $30+ billion into the NDIS, yes, it is $30+ billion into the NDIS, then what that is seeking to do is simply to fund what is already there. And there's some more reforms down the line that are going to have to come in that space. A question to Emily: how will you envisage the government reacting to the future of blockchain? Will regulation get in the way of innovation in that space?
So I think we're actually at an exciting time in blockchain. So a lot of people figure that it's really difficult or it's tough. We're actually at the same point as we were with the internet in 1996 in terms of take up. So if you think after that, that's when it started to become really usable and great. And I think that a lot of people actually see it as this sort of betting system, essentially, with the cryptocurrencies that are going a little crazy, and not see the huge benefit that can happen to society. So in fact, blockchain, because we're taking out a lot of middlemen and actually giving a lot of trust in transactions, will mean that a lot of money that's in escrow and actually not out in the money supply can actually be released into the economy. And so the huge benefits of blockchain are not being seen yet. The ability to actually have provenance tracking of supply chains is really important. All of the legal sort of aspects that can be done with blockchain are fantastically useful in smart contracts. And so I think that the government is starting to really understand this. I see them sort of just gently watching what's going on around the world, and I hope that they'll be smart in the regulation. We're certainly talking with people who are advising the government on the regulation, and frankly, I think they're doing a pretty good job so far. But it's up to government, to business also, to say, how can we make use of this in our businesses? And we also need all of the financial sector to understand that this could be one of the biggest disruptors. It will take out most middlemen, and we may not actually have a lot of the financial sector that we think is just going to be there forever in the next 5 years. If you're in the financial sector, you need to absolutely look at the risks right now.
A question for you, if I can say, it relates to another development in the budget, which is an umpire, an independent umpire, to be inserted between particularly small and medium-sized businesses and the tax office, so that if there's a dispute or a claim for unpaid taxes from the tax office, it's not just simply between the tax-paying entity and the tax office, but now there's going to be a new independent umpire. Is that a need that genuinely needs to be addressed, and how do you think it might work?
Look, I think it's a very business-friendly initiative. Obviously, it is a very David and Goliath type struggle when the tax man knocks on the door and is asking the business for payment of arrears. I think speaking to a lot of businesses at the moment, they have enjoyed a fair bit of indulgence from the tax man over the last 12 months in terms of breathing space for paying their tax debts, and that was a conscious decision made by the federal government. They are worried, as sort of businesses bounce back, how aggressively the tax man is now going to start to turn the screws. So I think the reality is, from a business perspective, it is absolutely a positive initiative. The only thing I worry about a little bit is, like most of these things, can it be open to abuse? And so, for some, who will purely try to use it as a mechanism to delay, they can try to kick the can down the road in a reasonably easy process, as opposed to the alternative, which is going to be litigation, legal fees, lawyers, and all the rest of it. So, I think from a business perspective, where it doesn't get abused, I think it is a positive.
A question, I think I'll put it to both of you, but it's phrased as such: advanced technologies and new materials do not exist in isolation. Ultimately, someone has to extract the natural resources. Does the budget address developing the value chain from primary production to advanced industries in the long term? Saeed?
Yeah, I think Emily might be best placed to answer that question. I think the only thing I would say is, the thing that gets me about how we run our country is we dig up our natural resources and we sell them overseas, for a fraction of their value, quite frankly, because then it gets processed and value is added, and then we import the finished product at a multiple of what we've exported the raw materials for. So if we can add some of that value domestically and try to keep some of that value in Australia, I'm all for it.
Emily?
So we're working with some of the biggest mining companies in the world and working out what they can do, and it's incredibly exciting. And I want to say it's not the government's job. It actually is the job of business to say what's possible. Let's actually build these ideas here. We can make so much money out of it. Having said that, the government is putting a lot of effort into this. They've got this fantastic initiative around manufacturing. Yes, there's only 6 areas of focus, and maybe it should be broader, but any help that they can give is great, but it's up to all of us to actually change this picture.
Well, we're coming towards the end of where we are. We've got some poll results coming in, and I wouldn't mind getting some reflections from you on these poll results. One of the questions was, do you think the government is focused on mid-sized businesses enough in this budget? We started off, maybe we've discouraged people, because initially we had 56% saying yes in the early polling, and then the horses have come to an absolute dead heat. 50% say yes and 50% say no. So do you think the government has focused sufficiently on mid-sized businesses in this budget?
I think the answer to that question, from my perspective, is yes, but I appreciate the 50-50 result, because everyone's going to answer that question from their own personal perspective. Like everything in this budget, it is a balancing act. And the same way you run your business, you have a limited pool of capital and resource, and you've got to work out the best way to apply that. So I think this budget, from my perspective, there is something in there for everyone, including mid-sized business.
Okay, we've got another polling question, and I'll give you the answers. It's not a yes/no question. It is, what is the best strategy for your business in the current environment? And I'll give the number as well as the results. 68% say they believe their best strategy is to grow organically or via CapEx investment. 23% are saying to grow by acquisition. 9% say to maintain the status quo, and 0% seem to be voting for selling their business and maximizing the value right now. So whatever happens, people think there's value still in their business and they don't want to sell it out. But maintaining the status quo, well, there's only 9%. Overwhelmingly, the desire is that people grow organically or via CapEx investment. Does that surprise you, Emily?
No, and I would vote the same, but I do want to actually give a plug for the Sell My Business and Maximize Value, because I actually think that in many of the existing industries, we're actually at the peak of their value. I would actually say, sell that business, get a new idea, build that business. If you've built one, build another. And so this is a fantastic time to cash out.
Saeed?
Look, I take some really positive thoughts away from the optimism and enthusiasm of our entrepreneurs, where they want to continue to grow. The majority of those respondents were keen to continue to grow, use the money that they're making to invest back in the business. I think that's what we need to continue to drive the recovery, quite frankly, and the Treasurer spoke to that last night as well. So that's really pleasing to see.
It is interesting, and it is worth just pausing for a second and think, where were we a year ago? And I recall going down as a reporter down to the Centrelink offices in East Sydney, down there, Woolloomooloo, Darlinghurst, that part of town, and seeing the queues of people going round the corner as the businesses were shutting their doors that day at midday as part of the first wave of those lockdowns. Seeing scenes, I almost sort of felt as if my glasses should turn to black and white, because the last time I'd seen or imagined those scenes was coming out of the Great Depression. To see them happening in real time, really, it is worth reflecting on what a profound shock we've all been through personally and globally. And the last of these poll questions is your organization looking to grow? We've got 95% say yes, 3% say no, 2% say they're not sure. That is just an astonishing statement, is it not, of where we are just 12 months on from a catastrophe?
Absolutely, and I think it just says a lot about the fabric of Australians to be, so optimistic and so willing to, even when you get knocked down, to get back up, dust yourself off, and go again.
Emily, last word.
In the GFC, there was $330 billion worth of bad debt that caused a big problem around the world. In what you're talking about a year ago, 25% of the whole economy of the world shut down. And look at where we are now. It's really incredible to see how little a shock it was given the magnitude of what went on. So if we can take that kind of innovation and optimism and quickly pivoting what we're doing and now say, how do we use that kind of thinking to grow, then Australia should be in a pretty great place. Let's use this as the once in a lifetime opportunity.
Well, certainly the consequences at a Commonwealth level are deficits, and they're growing debt. Let's not ignore that. But full credit to all businesses, everyone on the line, for keeping the faith. It was calamitous, and I remember an old timer in my office saying, "We should all be aware that over the next year, anyone who has a job will be considered rich." And that was fairly consistent with the figures and the expectations coming in for the spiking in unemployment. So through policy levers and through people just finding ways to stick through it and get to where we are today, it's full credit to everyone on this call and everyone across the country. That wraps up this session. I want to thank our main speakers, Emily Sidney Smith, Saeed Jahani, and of course, Uncle Alan Madden for the welcome to country. Thank you both for being with us for this session.
Right.
And coming up, we've got more seminars. They're coming up right after this one. They start. I'll give you time to just race off, get a cup of coffee or whatever. And from 1:35 Eastern Time, there are separate sessions on tax, on manufacturing, and also on health and aged care. And hopefully these will answer some of the more technical questions that we may not have got to in the course of our Q&A session there. But I'm Hugh Rimmington. It's been a real pleasure to be part of this. Thank you for being part of it as well, and have a great day.